What'd you think of the earnings call?
I thought, yeah, it was probably disappointing for a lot of people. I could see that. I wasn't excited by it. I wasn't heartbroken by it. I felt like the foundation is continuing to be laid for the next huge, massive leg up, but I don't think that that's coming, in the near term. I think that we're going to have to wait another at least a year, probably somewhere in the neighborhood of 2 years, maybe even a little bit beyond that. In that vein, I feel like we just have to continue to monitor the the fundamental technologies. And so on that front, we, didn't get great news on Dojo, for example, which a lot of people have been very hopeful for. And which I'll actually take that in a different direction. I thought that it was hopeful to hear that they have a 1.5 in the works, because what that tells me is that Dojo V1, while it's not able to keep up with Nvidia right now, and anyone who really understood Dojo understood that a while ago. Um, the fact that they have potentially a 1.5 in the works means that there may be quite a bit of salvageable use that they can get out of Dojo V1 with very minor upgrades that are fast to get into production, and may be able to be deployed into their stack here in the not too distant future. And so, they wouldn't be ramping a 1.5 if it wasn't valuable. And so the fact that that got mentioned, I think, is definitely a positive sign for Dojo in my mind, although I'm sure other people heard it in a completely different light, because I think they're just coming to terms for the first time with something that I've known for several years. And that is that the first iteration of Dojo was basically 90% chance that it wasn't going to be able to keep pace with NVIDIA at this point in time, but that it was a necessary stepping stone to continue down the road of developing their own in-house supercomputer, and that there will be, V2, V3. And so, yeah, like all of that was stuff that I expected. Then on the other core technologies, 4680 ramp is going well. That's another huge one. We have so many other battery suppliers that are also planning to ramp up production here with the announcements by Panasonic, for example. We know CATL is working on factories here in the US as well. So that's another big one. And then I feel like what we heard on Optimus was relatively positive as well. So those are all big ones. And then FSD V12, we have it, and they spoke positively about that. Like those are and then energy, deployments are continuing to ramp, even though I know a lot of people said that the hiccup in revenues is very concerning to them. I think that that's just a revenue recognition issue, just like Matt said. I think that their deployments are continuing to grow steadily and very smoothly, and that just because they have a choppy revenue recognition on energy deployments doesn't in any way, like the deployments of the actual number of gigawatt hours has been smooth, and that's really the thing that we need to look at. And so that was also positive. But yeah, I mean, I think those are the things that were important to me from the call. What's your reaction?
Yeah, I generally echo that sentiment. I think that the Dojo comment took a lot of people by surprise. I could see it on X. Like people were like freaked out. I think it's relatively aligned with what the guidance of the company has been in the past. I just think there were a lot more like Elon used a lot more explicit language that said this has a chance of not working out, but we're still going to try as hard as we can to make it happen. I think if anything, it just speaks to how good Nvidia is more than anything. I think it's like, damn, Nvidia is so far ahead. You were talking about this before, and like that got my gears turning too. It's like, damn, like Nvidia is so freaking far ahead when it comes to this stuff. Question for you though. Actually, let me answer your question first. I thought the tone of the call, if you think about the tone of Tesla earnings calls for the last few quarters, it's been a lot more somber, a lot more tempering expectations. Like the thing that almost everybody wanted them to do, they started doing. And all of a sudden, I feel like folks are generally now unhappy because they started doing what they wanted them to do. which is like stop over promising and under delivering, start setting your expectations properly. And then they start setting the expectations properly, and people are like, where are the adults in the room? I'm like, what are you talking about, you guys? What's wrong here? Let's, what do you want? What do you want, right? So for me, like what that told me is like, okay, there is still this, overarching thought that for some reason Tesla is not executing at a high level, that people are distracted, that they're not messaging stuff appropriately. And I think what it really comes down to is I think people I think people are just frustrated with Tesla's price action in the last 3 years, and they're allowing the market to dictate their feelings. And that is such a backwards way of looking at investing, in my opinion. I think the real story here, in my opinion, is that Tesla is on the cusp of completely changing what it means to have a transportation unit with FSD and V12. And somehow, not somehow, I know exactly why this is the case. People are discounting that tremendously. And a lot of that, and I was talking to Jacob about this before I came on, is that the overpromising and under-delivering of full self-driving has been so severe for the last 6 years that folks have just completely, they just pretend it doesn't even exist. But pretending it doesn't even exist completely removes one of the most important theses around the Tesla investing thesis for the next 5 years, if not for the next 20 years, because the success of FSD also means the success of bot. And these two are the things that will drive likely to be 95% of Tesla's profitability into the rest of the century. And somehow we're not like that. That's just completely out of focus now, especially on Wall Street. And Gary Black, did you read his post from today or from earlier, late last night, earlier today? Okay.
Oh, I missed it. So summarize it for me and the audience.
It was basically the people that actually need to grow up are the analysts, because analysts are so used to CEOs spoon-feeding them information, and CEOs hate to give guidance because of that, because then they're held accountable for stuff that's out of their control. And so what analysts need to start doing is to start analyzing the company and start shitting on the company for not spoon-feeding them information. And I'm like, Gary, oh my God. Like, I was so happy to hear him say that, because it's 1,000% right. And a lot of the, not a lot, basically 80 to 90% of the discussion around the Tesla story for the last 24 to 48 hours is because of that dynamic, in my opinion, is that people are just want to be told how to think. And like, okay, if you want to be told how to think, maybe you shouldn't be a fucking investor. Like, it's crazy. It's like, that's how you miss out on opportunities, man. Why am I getting so passionate about this?
If you need to be told how to think, you're not an investor.
Right.
You are someone else's exit liquidity. At best, you're
Yes.
a trader, and a trader is just a sucker waiting to get taken. If you don't know how to think and analyze your own investments and come up with your own thesis, and then constantly reevaluate, like, am I thinking about this correctly, or am I completely off in la la land? Then you are totally up a creek. So I would 100% agree with that. And I mean, that's why, shoot, I still am just blown away when I think back to how good the analysis that Andrea James did of Tesla, like back in the day, because she did exactly this. She pounded the pavement. She had sources anywhere and everywhere. And she really figured out the fundamentals and the first principles of the Tesla story while everyone was crapping on the company. And she got it right. And like, not just right, but really, really, really right. And I'm by far the first analyst to give Tesla the respect that they ultimately were going to earn, and for the right person who was willing to put in the legwork of figuring out how to think about it and how to develop the data necessary to extrapolate accurately into the future. I mean, she just did a phenomenal job. So I still miss her analysis even to this day. And we've got some great ones. I think that Pierre Ferragut does a really good job with understanding the story. We have some other analysts who are getting to be like Adam Jonas doesn't suck in his coverage anymore. He's not right on everything, but he's actually thinking about things in a much more fundamental way, and doing a lot better job. So yeah, I think that what you said was spot on, and I think the Tesla investor community, like, is so big now. This company is huge. Like, you think about the number of shares there are out there, the number of different shareholders, whether those are retail or, institutional, whether they're people that are trading in and out of the stock, whether they're long-term holders. Like, it's a huge group of people, and just the law of large numbers, the same way that when you have a YouTube channel with over 100,000 subscribers, you've got a lot of crap in your comments every day. Well, the same thing is going to be true, as a company that has, millions of shareholders. There's always going to be noise. People are always like, there's always going to be someone who's upset about something. Now, in a time like this, obviously that's going to get just amped up way more than normal. And that's what people are kind of reacting to. But if you want to be an investor and you want to make money over the long term, like, this is the way that I think about investing for myself personally. There are 3 advantages that I have. Like, you have to know yourself as an investor and figure out what it is that you're good at and what you're not good at, and then figure out how to capitalize on your strengths. And so I know that I am not the type of person who can intuitively feel the moving of the market, and time moves in and out of stocks or the market in general, ETFs, whatever the case may be. Thing that I'm good at is evaluating the leading indicators of a technology company over the long period. And so I can see, hey, is this a technology company that really has the potential to significantly grow their revenue in the next 10, 15, 20 years? I feel like I'm good at that. I'm good at being patient with the stock, and I'm good at stomaching volatility. So when, the stock goes from 300 and some change, almost $400 down to $100, like, I held my position all the way through that. I haven't sold anything in a long time. Other than I guess had a small bit of margin. So when it went down to, in one specific account, I had a small bit of margin, and I initiated those at like 250 or $60. And so when it went down to 100, I did end up having to liquidate a couple of shares just to, you know, um, offset the margin when I got margin called. But other than that, yeah, I'm just holding all the way through. In the not too distant future, I should be able to really build back up and actually surpass what it was that I had to sell initially. And so, I'm just building conviction over the long time. And I expect to be compensated over the long term for my discretion, for my patience, and for my ability to stomach volatility, which means I have to structure my life and my investment portfolio so that when things go up and down wildly, I don't have to sell a bunch of stuff. And that's where the margin thing was a mistake on my part, was because I got a little bit and like I didn't use hardly any margin. It was just a little bit. And even just that
punished.
little bit, I got punished. I was like, you know what? I should have learned my lesson. I shouldn't have done that.
Yeah. Yeah. I think everyone who's been investing for a while has a horror story as it pertains to margin or options. Mine was call options back in 2014. Boy, was that, yeah. I learned my mistake early on not to ever do that. I mean, props to everybody who makes it does well doing that, but I steer away from that stuff like hardcore. What's very interesting what you said about Andrea James, and her ability to see the Tesla story back in 2012, 2013. So I think that's such a great parallel, because if you think about what the story was back then with Tesla, was this is a startup company that is making a thing. This is how most people viewed this thing. It's a startup company that is making this thing that is probably not going to work, and we don't understand why people would be buying this stock, because there's so many car makers out there who know what they're doing 1,000 times better than Tesla. What they completely ignored is that what Tesla's building is not something that everybody else can build. And this thing that they're building is going to be the new form of transportation for the next century. And now, in 2024, it seems like the general public, not the general public, let's say a significantly higher percentage of the population that would be interested in that have turned a corner. And they're starting to say, yeah, it looks like this is becoming a likelier scenario. But now the story for the company, as they're still building that part of their business, and they're on the way to 10 million per year, 20 million per year, becoming a cornerstone of the supply and the manufacturing techniques for the auto business. As they're still doing that and growing that, they have this fundamental shift in how those units will move around with full self-driving, and their methodology around solving for that no one else is doing, which is utilizing vision to solve for that. And that becomes the thing, right? Because now like the story is, well, Tesla might not be able to make, the full self-driving is probably not going to work because they're not using LiDAR, because they're not using the proper amount of sensors. This is completely untested technology. I'm like, you guys, come on. We've been here before, I feel like the thesis is it probably won't work because it looks hard. And I'm like, okay, cool. So
yeah, because normal companies couldn't do it.
Right, because exactly, because normal companies going to do it. So it's such an interesting parallel you draw there. I think the encouraging thing for me as it pertains to full self-driving, that's why I'm becoming so. My New Year's resolution was temper your expectations. But like I'm a month in, and it's impossible for me. That's not the kind of person I am. Sorry, I'm already reneging on my New Year's resolution. Sorry, everybody. If you're coming for a level-headed discussion, you're in the wrong channel. So, the fact that they were able to remove 300,000 lines of code and whip up a software stack in less than a year that performs better than the thing they've been working on for 6 years is a giant disruption. That is so underappreciated. I think, and put on top of that the methodology they're going to use to make that system better is strictly dependent on data gathering of the real world, which they can do with everything they have on the fleet already. There's nothing else they have to do, and just getting more H100 chips. That's all they got to, I'm simplifying it a little bit, but that's really all they got to do. How's that not going to win? That's where I'm at. Like, how's that not going to win? With enough time, how is that not going to win? And and what is the biggest moat that you have in that thing that's going to win is the data. The data is the thing that's going to allow you to win. It's not necessarily going to be the H100 chip, because NVIDIA sells that thing to everybody, right? And they're making a killing on it, as they should. It's not going to be even the computer that's on the car or the cameras, because that's like what, $1,500, $2,000 worth of parts. Okay, anybody can put that in their car. It's the freaking data, man. It's the data, and no one else has that data. So I don't know. It's just it's strange. It's strange. I guess it's not strange. It's interesting to see that we're in a world now, in my opinion, that I think folks are heavily discounting the impact that FSD is going to have in the near term because of the companies, and Elon specifically, over optimism and under delivering of the software. But the fact it's taking this long and it's so complex to solve, I think it's the canary in the coal mine, that it's because it's taking them this long proves that they're way ahead of everybody else when it comes to this. Because you think if there's one thing Tesla has as an advantage over everybody else, which you've mentioned as well, is that the amount of talent and their approach and the leadership and the way the company is structured already means that they're working towards a solution faster than everybody else combined. And if it's taken them 6 years, how long do you think it's going to take everybody else to come up with a solution that doesn't have to necessarily drive itself, that it can drive itself at scale with very low costs associated to it, and they can leverage their existing supply chain and manufacturing processes to make that come alive. They don't need any new investments when it comes to the car. If Waymo wants to crank out 1 million self-driving cars per year without going bankrupt, they're going to have to fundamentally change how they're building a solution, because it's just not profitable. Like, okay, I guess, when Tesla has an earnings call now, like that's just not part of the equation anymore. And it is what it is. It is what it is.
I think that if you look at any of the other companies besides something like Comma AI, that what you've said is 100% correct. Like Waymo can't scale up. None of the auto manufacturers can scale up faster. I don't have any visibility in China. But the open source movement does have a shot at being able to produce scalable hardware that is very useful. It may not be fully capable in the same way that Tesla's software and hardware is, but then the other thing that, Tesla has a huge advantage of is already this installed fleet that has the hardware in it, and it just needs the software update. But nobody else has that, and that's something that's going to be huge. And I think a lot of people really, really underestimate, and this is a drum that I've been beating for a long time, the potential for Tesla just to leverage SaaS revenue for purely driver assist technology out of that system to people who don't necessarily need or want a robo taxi, but they want higher quality driver assist. If you had full self driving today, but it was so good that you almost never had to intervene, then I think a lot more people, and not only you as a normal FSD beta tester, but say the normal driver, whether it's Cindy or whether it's, anyone who has never driven this before, like if they can get into a vehicle and get comfortable within an hour of driving, and then they almost never intervene, well, all of a sudden the value proposition of that is much higher than it is today, where it takes a lot of attention and it makes people feel nervous and uncomfortable. And so as the comfort level rises, as the safety rises, the value proposition rises, and that means that the take rate will rise at the existing prices. Or, this is software. It's zero additional expense to deploy the next marginal copy of FSD. And so they can even lower prices, and they can dramatically increase your gross profit SaaS margin revenue. And, I think that is where we will actually see the financials start to move for Tesla, and that those actual margins are going to be a big part of, whatever the next large leg up in the stock ends up being. And all of that's going to happen before robo taxis. Unless they want to do some like little pilot in San Francisco to go head to head with Waymo in a specific geography. But you can think of the effect of just increasing the fleet wide take rate on FSD. I think that would dramatically overwhelm some small little test deployment of a robotaxi network from a financials perspective. And then that's where people are going to come piling into the stock. Oh crap, like FSD's here. They're making money hand over fist, and there goes the parabolic move.
I think I agree with you. The key thing though for that to actually be true is that it has to be level 3 at the minimum. It has to be level 3. It can't be level 2, because the one thing that we have to keep in mind is the dynamic of a person in a car that is supposed to be in charge, but the system is so good that they don't technically have to be in charge, but they're still in charge. The psychology of that is so different from a car that explicitly tells you, do not pay attention, go on your phone and doom scroll for 30 minutes, right? Like it's very, very different, because when you're actively monitoring a driving system, I feel like there is this friction with the machine where you're constantly gauging, oh, I would have done that differently. Oh, I would have done that better, And even with FSD being at the point where it can drive just like a human, like let's say it's incredibly natural, even then there's going to be some situations where you're going to be like, that turn, I would have gone a little bit quicker. I don't know why it's waiting so long at the stop sign. I would have gone a second faster, right? I think, and at that point, if people become impatient, right? If they're like, I'm just bored watching this thing do things that I wouldn't do, I think that will create a barrier for the adoption. I think what you just described will happen if Tesla says we have a level 3 system, where the system will say you do not have to pay attention right now. It will bing, 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 bing. The system can now take full control. We will let you know once you have to pay attention again. I don't know, something like that. And then you literally just open up your phone and the reality disappears. And you don't even care. You don't even notice if the car was slightly slower at the stop sign. You'll only realize that if someone's honking behind you and they're like, hurry up, then you're like, oh crap. So then the system's goal should be to remove those things from happening over time, right? But they will get there. They will 100% get there. And once they do, I 100% agree with you that's the type of dynamic I expect as well. Because the pathway to level 4 becomes clear, right? If you do level 3, by default, level 4 is just level 3 that happens everywhere. That's all level 4 is. It's just level 3 that happens everywhere. And how will level 3 happen everywhere? With more data. Okay. We're done. Good night, everybody. Yeah. So no, it's I think you're 100% right. But it's going to be interesting to see when Tesla decides to turn on level 3.
Yeah, the thing that I would bring people back to is just to, like, if for any investors in the stock who are newer to the stock, you really should go back and acquaint yourself with the history of the movement of the stock. And what you'll see, and we talked about this at the earnings call, I've talked about this other places, is that from the inception of the company until early 2012, mostly flat. Then, as Tesla released the Model S ramped. It got a lot of recognition as the best vehicle on the road by Motor Trend, and they were able to recognize profit from ramping that vehicle line. That's when we see a huge move. And we go from $20 to, I think it was like $300. And this was all, pre-split, split, like back in the day. And so it was like roughly a 10x move over the period of less than a year. And then you were in the stock at that point. I didn't even really hardly know that Tesla existed at that point in time. But then from there, we basically traded sideways, up and down from there until 2019. And what broke us out of all of that? Well, it was a combination of, we finally made it through production hell on Model 3, and then cash flow started to turn around and become positive. And so the company wasn't in risk of going bankrupt anymore. And so we saw positive free cash flow, and that kind of started a move that then got compounded because Model Y was released and went gangbusters. That program became profitable. Then Shanghai was built and reached production in record time. And so it's just like multiple things finally all got recognized in the P&L of the business over a period of time, and that created another 10x stock. Well, there's like all kinds of groundwork that they had to lay in order to accomplish all of those things. And so it's really the progress of the company from a first principles and a fundamentals and a leading indicator standpoint is very smooth over time. But then how that actually flows through to the lagging results of the financials is choppy. And I think the choppiness in the stock reflects the choppiness in the profitability of the company. And so I think that people who think, oh man, they're such a great company, they get these massive returns, all I have to do is put my money in the stock and wait a year, and then I'll make 2 times my money or 3 times my money or 5 times my money or 10 times my money. Well, that only happens if you're the lucky person who finds out about the company in late 2012, or sorry, late 2011, early 2012, or in 2017, 2018, and you get that run. Otherwise, you just have to endure a long period of the stock digesting over time And I think we're really, this feels to me a lot like 2017, 2018, that they're executing on all the things that, to me, as someone who looks at the technology and the execution of the company, I can see this is going to be massive. Like, all they have to do is continue what they're doing. Like, they're not doing anything wrong. There's nothing that is an obstacle that they can't overcome. It's just going to take time for them to execute on it. And I think that we could very, very reasonably be in a situation 3 years from now when we're seeing multiple huge profits, or multiple sources of huge profits hitting the bottom line from energy at the same time as ramp of next gen vehicle, at the same time that we're seeing profits from full self-driving, at the same time that we're seeing cost reduction from Optimus. And if we get any one of those things, the stock will make a good size move. But if we get multiple of them, like we did in 2019, 2020, then it could be a huge move. And we could be, the first company to surpass $5 trillion, potentially even move up in the neighborhood. Like, I think there's a very real possibility that by the end of the decade, Tesla is the first $10 trillion company on the face of Earth.
Yeah. Not financial advice, not, investment advice, obviously, but I agree with you. I mean, I think it's just down to the math. Just do some math. What is the value of a fleet of 10 million plus cars that can drive themselves, plus a humanoid robot that can do manual labor, plus an energy division that has unlimited demand because the world's grid is trash? I'm just asking people to sit down and do the math. Execution becomes the true differentiator here, right? I think it's hard to debate that Tesla. Okay, so I would say that generally everybody agrees. Maybe not. Like, if you don't agree with this, I think you're just a Tesla bear at that point, which is fine. You can be whatever you want, obviously. But I think generally we can agree that what the technology that Tesla is working on has the potential to have that kind of value creation, because you're reimagining what the economy looks like at that point. You're reimagining what kind of technology we're going to have in the next 10 to 20 years. Kevin made a tweet or a post yesterday that was like encapsulated this beautifully. He said, in the short term, Tesla is a call option on interest rates. In the long term, Tesla is a call option on the future. And I'm like, that is such a brilliant way of encapsulating exactly what the dynamic is with the stock, specifically with the stock. But it talks about the technologies that they're making. I think that what they're working on is game changing. It comes down to execution. And if you don't trust that they're going to execute, then it doesn't seem like the story is for you. If you don't have trust that, if you really do feel like Elon's distracted by X or Twitter, if you really feel like he hasn't hired the right team around him, if you feel like they're just not doing a good job with FSD and their ramps and their cost controls and advertising, I could get myself in a frame of mind where somebody is frustrated with the story because they don't feel like they're doing as good of a job as they should. I totally get it, like 100%, I get it. But I think execution is one of the hardest things to judge, I feel like, with game-changing technology, because no one else has done it before. So I almost feel like you don't really know what to expect with game-changing technology. You almost have to have a little bit of like it's like a trust issue. You have to almost trust the people in charge that they have your best interest in mind and they will execute against the things that they're promising, right? And I think sometimes what I hear on the, like, let's say the uber bearish side is that this guy is a scam artist. This guy has overpromised and underdelivered on everything. Nothing he said has ever come to fruition. And then you look back in history and you ask your question of what are you talking about? That's where I'm like, that entire argument gets lost, because there's countless examples where Tesla has promised something that was absolutely insane and then they ended up doing it. Not even Tesla, Elon Musk himself, freaking reusable rockets, electric vehicles that are profitable, the most cars out of a factory in the United States in Fremont, and a best-selling car in the world by unit, even though it's double the price of the next best-selling car, Model Y and Corolla. Now, the thing that he hasn't delivered on yet is coast to coast car that can drive itself with zero interventions. He's about 7 years late on that. Okay. And so I get, like, if you take that, I don't know what I'm doing with the middle finger. Subconscious. If you, if you're using that as your gauge that Tesla doesn't execute, I think you're missing the whole picture, which is there is just as big, if not crazier, things that have been done that people thought were impossible that turn out to work. And so I think where Tesla is uniquely positioned is that it's this combination of making impossible things happen that happen to be incredibly valuable, and they happen to be a public company so that an individual can take advantage of that game-changing thing that has happened. And I think if you take the last 3 years, it's easy to forget that if you're worried about the stock, if you're looking to exit the position soon. Of course, you're going to be like, God damn it. Just don't say something or do something that's going to make it go up so I can feel more comfortable about my position short term. But then at that point, it becomes a question of time horizon, how long you're willing to hold the stock, the tolerance for their execution, and how long it's going to take them to execute on something that's never been done before, and then your trust that they're actually executing. Like, those are the three. That's how I view Tesla stock. Like, if you're asking me, fundamentally speaking, how do you think about your core thesis? Like, what are the driving factors behind it? It's those three things. It's like, I trust management. I was there, dude. I worked there for 4 years. I know exactly what the team looks like in there. I have a lot of faith in it. I've seen the company do some crazy shit for the last 10, 12 years, and it doesn't seem like they're slowing down. They're just doing harder and harder things, right? And I'm willing to hold on to this thing until I die. Okay. For me, it's not an issue if the stock goes down 13% in a day. I don't care. I can see how people would be dismayed by that and very frustrated by that, and I totally respect it. And that's why I never tell people to do anything based on what I say, ever. But I also think that there's a lot of people that are discounting the game-changing nature of what's being worked on because of recent developments. Especially, Elon buying Twitter was kind of the beginning of this disaster in their eyes, I believe.
Yeah, I would say that, people need to look at who do they want to, who are their investing heroes? Are they trying to be Warren Buffett, or are they trying to be Peter Lynch? Do they look up to someone like Dave Lee, or do they look up to someone like Drew Dixon? Different people have different personalities, and there are different types of investing that fit each one of those different personalities. So people need to kind of figure out what resonates with them personally. And the types of people that I really admire and respect and try to emulate are people like a Jason DeBolt or a Dave Lee, or a Peter Lynch is a great one because he actually did it managing other people's money, and that's super difficult. A Ron Barron, these types of people. And if you want to achieve the success they've had, Stephen Mark Ryan would be another one who went in early, went in hard, and has managed to hold on. You've done the same thing. And not only, not just, you were very creative that you didn't just liquidate or find a way to get a bunch of liquid cash to invest in the stock, but you actually went to work for the company and traded your time for a large amount of stock so that you could get as much stock as possible so that you could benefit from the execution of the company. And so, people can get really creative in the way that they do this. But the common thread among the people that I think do this really well, that I'm trying to model my investments after, are people who, just like Dave Lee talks about, are able to compartmentalize the risk of the investment that they're making, that they have their life and they kind of have things going with their life that they can pay their bills without having to touch or worry about this bucket that is your risky investment bucket. And so they can compartmentalize this. They don't have to worry about, is it up today? Is it down today? Like, I'm not touching this thing no matter what happens for 10 years at least. Like, if you can't say, I'm not touching this for 10 years, then that bucket of money is too important to the rest of your life for you to be able to stomach that volatility. And so that's, I talk about the ability to stomach volatility. The only way that you have that ability to stomach volatility is if you can compartmentalize the risk of that volatility so that it doesn't legitimately drive fear in you for what that is going to mean for your life in the near future. Because if you can just think about, like, that's money for way off in the future and it doesn't impact my day-to-day life, then all of a sudden you cannot feel like the movements of that stock have anything to do with your emotional well-being for the day, or your fear, or your excitement either. Like, it's just a thing that's out there. And when you see these people like Dave and yourself and Jason DeBolt, that's what you observe from them, is that whether it's up, whether it's down, 25% in a day gains, 25% in a day losses. Yeah, it's just another day. Like, this is how investing over the long term works. And so that's a big piece that people need to kind of get in their mind straight and practice those muscles. And then the other thing is that the trust that you talked about, trusting in management is not something that you inherit or absorb by osmosis from listening to people on YouTube or reading investor analysis reports from Wall Street people. Like, those give you a sense of what other people think about the stock, and that can inform you. But you actually have to develop your own, like we talked about earlier, your thesis for the company and your understanding of the technology and the management. And you have to do so much research that when you hear someone else say something about the company, that you are taking that as a piece of data that helps to inform this big thing that you have built up. But if that thing that comes in is more than 2% of your view of the company, you don't have a big enough view of the company, and you don't need to be investing in this company. Because every time I've done that, I have jacked up royally. Like, sometimes it'll win, sometimes it'll lose. I never know why. Everyone's been talking about how PayPal is going to be super value stock and it's going to move crazy and it's a great company from a financial perspective, even though I hate their management team. I was like, you know what? Like, a lot of people are excited about this company. I'm just going to dip my toe in the water just to buy some call options, just to kind of see what happens. And my experience with that has been awful. And it's because I hated the company to begin with. I didn't know anything about it. Like, I don't know if it's going to go up or down. I don't know anything. And like, I'm just like, I bought a ticket to the movie and I'm eating the popcorn. I'm like, this movie sucks. And so yeah, I just want to sell my ticket and get out. Like, go back to things that I know about and I understand. And that when I look at that, like, I look at the big red number and I don't understand why it's red, or even worse, I don't understand what they need to do to make it green. And since I don't understand how those things are going to happen, then I have no conviction about what it's going to do. And so when it goes down, it makes me feel 10 times worse. So, people need to really take responsibility for their understanding of a company. And that's, I really go back to Peter Lynch on that one. Like, when you buy a stock, you are buying a piece of a company. And if you want to, like, you need to understand that company deeply if you want to own a part of it for a long period of time. And there just aren't any shortcuts. Like, you have to do the work.
I love everything you just said. So much valuable information there. I think the thing that I keep thinking about as you were speaking is that investing. I think people love to make investing into a science. Like, they want to make it into a science. They like technical analysis, charting, candlestick patterns, earning reports, and analyzing cash flow statements, and analyzing, the rate of return on investments, and R&D spend versus net income generated, and growth rates on revenue, and declining rates on COGS, and on and on and on and on and on. I think there is such a huge market out there for scientifically understanding investing. But this is sort of my opinion. When it comes to innovative technology and innovative companies, none of that shit matters. And I think way too many people are trying to force a science into something that's deeply psychological in nature. Because when it comes to this, in my opinion, the only way someone is able to capitalize on a story like a Tesla, let's say, that has these giant promises that they will change what transportation is and what human labor looks like throw everything out of the window, and what it truly comes down to is the trust that they will make it happen. Because if they make it happen, nothing else matters. It's just a trust that they're going to make it happen. And I think that's why it's so hard for this story to gain legs in a traditional sense, because so much of the investing industry is trying to force the science on something that doesn't really apply to it. Like, I understand applying those things to very well oiled machines that have been around for a long time and are easy to predict. Warren Buffett has made tens of billions of dollars using that methodology, right? He's made it into a science of sorts that says, I'm not going to invest until I see these metrics. And once he sees the metrics, he goes. And then he waits, and then he has a bunch of money. So there is a tried and true method to that. But as it pertains to innovative companies, that doesn't matter. And you constantly have people that are trying to force that into it. They're trying to force that into it. It's so fascinating to hear you talk about that. It's such good advice. And I always think about that too. Is like, yeah, go ahead.
I love that you brought Warren Buffett into it because, really capturing value almost 100% of the time. It's not 100%, but it's a lot. Almost always boils down to arbitrage. Like, you have to recognize something that other people don't recognize as a need. And then you have to bridge the gap between the thing that's over here that people don't find valuable and the thing that's over there that people do find valuable. And when you bring those things two together, like, the further those two things are apart, the more value you get to capture in between the two things. And
you mean if something is truly valuable, but a lot of people don't know that it's valuable, like you find that gap and you bring those two together. Yeah.
Yep. Yeah. So in the context of stocks, realizing, like, understanding and being accurate about the fact that a company that I'm going to buy today for $100 a share, that in 10 years, it's going to be $10,000 a share. That would be an example of that. But it also, any good or service is kind of that as well. That you have to give somebody something that they don't have that they need. That is an arbitrage. And if you can do that, and the more valuable that thing is to them, the more of their money they're willing to part with and give to you. And so when you think about it, like, the things that are valuable are the things that other people are not willing to do. And so in the context of the technology that we're talking about, what is valuable is the willingness to put in the work and to build the trust, build the conviction, understand the story, and test it, like battle test it, make sure that it's up to date, because you can definitely be wrong in the story that you're building. And so you have to be able to build the conviction and structure your investment so that you have risk that is compartmentalized, to where if it goes to zero, it doesn't wreck you. If you can do all those things, that's what allows you to do that arbitrage. But Warren Buffett kind of does it in another way. That he's just willing to do more work on all of the boring stuff. Like, he's willing to look at companies no one else is ever going to want to invest in, because it would literally put you to sleep 10 hours a day if you read all the crap that Warren Buffett tries to read every day, so that he can find those things that other people are not looking for. And so, his value arbitrage is the type of work that he's willing to do, and then obviously the expertise that he's built up over time. And in addition to that, Warren Buffett also is huge on trust. He only does business with people that he has built up trust with. And so that's something else that takes time. So trust patience and willingness to do work that other people are not willing to do are the things that create arbitrage opportunities for someone to take advantage of and get a lot of value out of over time. I mean, this is also this exact same story of startups. Like a startup founder gets rewarded because he's willing to go be a maniac for 5 years and live no life other than making this one idea into a company and making that company sustainable so that it can make more money from the value and service that it's providing than it spends in creating that service. And so you see, like, once you see that pattern of arbitrage and being willing to do things that other people are not being willing to do, like your eyes just, bug out of your head and all of a sudden things start to make sense. And then as we move, one of the things that I really love about Elon, and this is one of the reasons that I am invested in Tesla and continue to pour so much time and energy into understanding this story and this stock, is that he's able to do all that while serving solving the biggest problems that he can solve and trying to reduce the risks at the largest scale to humanity as much as possible, because a lot of people are going to actually get value by doing something that other people are not willing to do, that is not a morally good thing to do, or it's not a good thing for themselves personally. And so, like, there's a lot of character and integrity and just moral constitution that goes into doing that in a way that serves other people. And then, so what I think that is cool about Elon is that he showed that if you turn that setting up to 11, like, I want to do what is the most good for the most number of people in the longest period of time, that's actually an opportunity that you maximize moral character on one dimension. Obviously, he's, kind of an erratic person on a day-to-day like, he's just a giant troll and enjoys it and enjoys all the controversy that goes along with it. So that's not the dimension that I'm talking about. What I'm talking about is the kind of person that's so freaking crazy that they think that they can single-handedly make it possible for humans to have sustainable settlements on 2 planets in the same solar system, and for that to be a base to then expand out into the stars. Like, that is such a that is so, like, it's exciting. It's good for people to have that sense of wonder and possibility that we can expand and we can make a more exciting future. Like, those are incredibly good things. And so for him to show that he became the richest person on earth, not necessarily by screwing over as many people as possible to the maximum degree, but by solving the hardest problems that face our entire species and giving us a new lease on life on the galactic and intergalactic scale. Like, that is something that is really cool.
100%. I couldn't agree with you more. I think that the thing that when you were talking about arbitrage and finding the gap of things that people don't know is valuable with the things that are truly valuable. I mean, self-driving technology, you were talking about as it pertains to this company. How can somebody say that self-driving technology and automated human labor is not valuable? It's just people don't believe that it's possible, right? So once it becomes possible, the player who has done it wins. You win a lot. And so on the topic of Warren Buffett, I wonder if the signal for the general public to finally believe that this is here is for his fund to start buying Tesla. Because I think that's when who knows? I don't want to speculate on that. Actually, that's just crazy talk at that point. So, yeah, dude, I love everything you said there. I really did. It's such a weird time right now. It's not weird though, right? Because it is weird, but it's not uncommon for this story because it's happened in the past. It happened in 2012, 2013. It happened again in 2017, 2018, 2019, 2016, and it's happening again now. Is that there is a doubt that the game-changing technology the company is working on will not come to fruition. And they could very well be true. And it just all comes down to trust that they'll get it done. And if they get it done, then things change again.
I love the phrase that, it's darkest before the dawn. And while it's not technically true, I think that a lot of times that's how it feels the stock moves, is that like the point of maximum FUD is what you get right before everyone, like as soon as there's definitive proof that all the FUD is wrong, that's when the thing takes off like a rocket ship. And so, going back to the arbitrage thing, that like the time of maximum FUD, if it truly is FUD, and it's not like you need to investigate it and make sure that there's not substance to it, but when there is maximum irrational FUD is the best time to make an entry into something, because you need to do that right before the definitive proof shows up. And that's the hard thing. You don't know when the definitive proof is going to show up, but you do know that one of the times there will be maximum FUD, and then the proof will show up, and then off to the races.
Tesla FSD level 3. That's the proof.
Yeah. I mean, my thing is maybe one before that still. I think that they're going to give free FSD trials to the entire fleet that doesn't have it. And to me, that's the signal that they have surpassed the safety threshold. And, maybe it's not free. Maybe it's like, try it for $10 this month or something. But whatever, there's going to be a signal that they want everyone to use it. And whenever we see the signal that they want the entire fleet to use it, that's when we know that the safety is to the point that they're ready to turn on the revenue spigot and just pull down cash.
Can you see the kind of content Cybertruck's generating now from just a few people that have it? Like, what's going to happen when millions of people, let's say hundreds of thousands of people that have access to TikTok, Facebook, social media, they get in their car and be like, dude, my Tesla's driving itself. Check this out. And you just have a flood of that happening on social media. To think that that's not going to have some sort of material impact on the story is like unfathomable. Like, I don't see how that's not going to be like a huge day. It's going to be like this thing. Now, it could get derailed really quick if these cars start crashing everywhere. It could turn into an unmitigated disaster. But it's that day's coming, and it feels very close. But we've been saying that forever. So
yeah, I don't know how that's different. Like I think this as someone who is an FSD beta tester. Like the difference in experience between V11 and V12 was pretty subtle. Like you have to explain it for people. How is this better than what they've seen before? And there's so much FSD content that's out there about how the car drives itself, and people like, no, it doesn't really drive itself. Like, I don't know. Maybe, and it's hard to tell from inside the Tesla bubble, like what do 99% of normal people think about when they hear that? I know that usually when I talk to people, it's like, oh my gosh, that's scary. And they just they don't even want to think about it. They just shut their brains off. They're like, don't understand, abort. And so I don't know what that is going to do, when you start seeing all that content all over the place. But, when we see people like Pharrell driving around in the Cybertruck and, various celebrities, and it's getting hyped up more and more, like I think that that's going to be definitely positive for demand, which in turn is positive for prices, which in turn is positive for margins, which in turn should be over a period of time positive for the stock. But yeah, I mean, it's hard to be able to say definitively.
I think a lot of the vagueness too from this latest call, just again, and I may have said this earlier in the podcast, I feel like a lot of the vagueness hinges on that dynamic as well. Because if that were to happen and say that in the next few weeks, on the call they said that they're looking to push V12 to the rest of the fleet in the coming weeks, which to me sounds like Q2 based on what has happened in the past. Once that happens, we know we're very close to that moment. And so at some point this year, if that goes well and V12 turns out to be the technology we think it's going to be, then that free trial should be turned on pretty quick. And that the free trial does another thing too. It doesn't just generate a ton of hype. It just generates a gigantic amount of data That's the other thing that is I don't think a lot of people understand, is that it's not just like a gimmick. It's not like, oh, check this out, start giving us money. It's like, no, they're literally, people are doing the work to gather data for them. And then once they like the free trial so much that they start paying, I don't know, $200, $300 a month for that thing, or they do it on a per mile basis or whatever, then at that point, people are paying to make Tesla's system better. So they're double dipping on profits almost, because then the system becomes even better over time from people using it. And then it turns into a giant flywheel. I mean, people that have followed the Tesla story closely know this is going to happen. But
I want to expand on that for just a second, because they're going to be following the exact same model. Like, there's going to be a ChatGPT moment. And when I say ChatGPT moment, I actually am talking on a technical perspective, that when OpenAI created GPT-3 and GPT 3.5 and GPT-4, like, these large language models have an understanding of the world in a general sense. But if you just try to interact with those models directly, the answers that they give you are kind of all over the place, and they're crap, and they're not very usable. And so OpenAI had to do this whole magic trick of fine tuning that to make it into a chatbot. And then when it was this usable chatbot, all of a sudden it was this magical thing that we see take off, and the fastest user adoption of any technology in all of history. And that step in between, that fine tuning step, that is something that they accomplished doing reinforcement learning with human feedback. And FSD v12 users, like FSD v12 is an end-to-end neural network, just the way that GPT 3, 3.5, 4, those are. And so the users now who are going to be driving V12 are doing this reinforcement learning with human feedback layer on top of this general world model. And so the more data that they gather there, the more that they can transform this general understanding into a highly usable, highly functional, highly reliable system. And I mean, there's obviously some differences, because driving has to be at a whole nother level of reliability than just chat, which does have a lot of room to mess up and not be perfect. So that makes this a little bit more complex. But the overall architecture, the overall concepts are the exact same concepts. And that's one of the reasons, going back to the trust thing, why I believe that they are going to make an incredibly valuable advanced driver assist system. Does it get all the way to robotaxis? You know what? I honestly don't know. I think so, but I don't even think it needs to get that far in order for them to make tons of money from it. And I'm confident that they can make tons of money from it, because they're following along this exact same technology path that we've seen other artificial intelligence projects go down, whether that is, DeepMind with their AlphaGo, the AlphaZero to MuZero, or whether it's OpenAI with the GPT-3 now into ChatGPT, and the advancements that they have in the underlying model that they're able to plug all that stuff together into. That this is something that we've seen this work in other areas. We've got not just one example, we've got multiple examples of where this has worked. And so they're applying it in a new realm, but the fundamentals of the core technology have proven that they can solve incredible problems that no one had ever solved before, to a level that far surpassed anyone's expectations before they were brought to market.
Yeah, no, I couldn't agree more. How many people are willing to pay something so that they can just, again, sit in their car and do nothing while they get to work, and they can just drink coffee and be on their cell phone? There's a price. There's 1,000% going to be a price, and people's time are valuable, and I think they're going to.
And as long as the system is perfectly safe, you can find whatever that price is. It doesn't matter, like whatever that person is willing to pay, as long as there's no added risk to you from an insurance standpoint or from a public relations standpoint, you can find whatever that price is. And if you're an incredible technology company, you can even do that dynamically in software.
Yeah, exactly. In cars you've sold 5 years ago. Like it's like so mind blowing to me that yeah, it's crazy. Yeah, wild.